we've had some inspiring speakers. I do just want to say that I'm not actually, we're talking about sustainability and resilience. I'm not really sure that Colin spending 36 hours at those 5 different parks is sustainable. I hope he spends more time there. They're lovely parks, and he needs more than an hour hike and so forth. But the speakers have been unbelievable. Amy, this is a wonderful gathering. Paul Hawken has been an inspiration to all of us that have gotten into this field. We feel as though we're standing on the shoulders of giants. We've been in this field since about 2004. And for Nancy, she's such an extraordinary investor. We work very closely with her. We got some amazing speakers that are coming. We've also, I should do a shout out, we've got some great lineup coming up tomorrow. My partner, Lila Preston, who is also on this board, is going to be speaking tomorrow, so I just wanted to make sure to recognize her. And also, this is a little bit in the family, as my son has a very cool sustainable finance idea that he's going to talk about in forest restoration bonds on Tuesday. So whatever you're doing, you definitely have to stay for that. Anyway, as we begin this, I just want, Amy asked me to give you a state of play of the sustainable finance field. So this is going to be in some sense at one level, but then also a little bit more granular. And I hope that, so I want to talk about sustainable investing, I want to talk about sustainable capitalism, and I'm hoping that this will stimulate some conversation in our, around the dinner table and other of those things, because we've got an awful lot to accomplish. And we have so many challenges, and we've been talking about this. Rick's beautiful talk and exciting talk on COP in Paris was awesome, but we have such urgent problems facing us. The urgent imperative of climate change, we have got to get to a 1.5 degree world, and it's going to take, by most studies, 35 to 50 trillion dollars to make it happen by 2050. And we raise at Generation the climate issue as the preeminent issue, not because the other UN sustainability goals are not important, like poverty or income inequality, but that all of these issues are inextricably linked, and we feel that the base of this is climate change. So there's obviously, when we're talking about sustainability, resilience, climate comes out more and more. And then, of course, adding to all the challenges that we have, we're thrown more curveballs seemingly on a daily basis, whether it's through terrorism or Brexit or our, in the US, sclerotic political system. But in any case, I think it's important for all of us here today to ask ourselves in our investments, in what we do during our day and in our foundations and other things, are we doing enough? Are we doing everything we possibly can to make sure that we have that sustainable, resilient, and low-carbon world? And actually, one of the things I want to talk about is that at Generation, when we got together, we actually said our efforts were not sufficient, and that we really needed to do more. And I want to talk about that in the next few minutes. So what I want to do is sort of lay out the journey that we've had in sustainable investing, and then to also talk a bit about what at least one asset manager is going to be doing over the next decade to try to help to push this agenda forward. Now, I realize that many of you do not know anything about Generation. The speakers that were up here before, I think, do, but it's not surprising. I mean, we're an asset manager. It's a relatively small or narrow niche of the economy. It is a small pond. We may be a pretty good-sized trout, but that's where we play, and we manage about $13 billion. Generation was started in 2004, so really only about 12 years ago, with the ambitious goal of making long-term sustainable investment best practice, and to see sustainable capitalism become the enduring economic model. We had the audacity to think that we could prove the business case for sustainable investing, and we knew at that time, and still know today, that the only way that you can do that is to beat the market, to beat your peer group that you're compared to, not just in the sustainability field, but but around. And that's what we've set out to do. Our chairman is former Vice President Al Gore, and our senior partner is David Blood, who was the former CEO of Goldman Sachs Asset Management. We used to describe ourselves as a sort of Goldman Sachs meets sustainability, but then Goldman Sachs became the vampire squid, so we don't say that much anymore. But we do call ourselves the Blood and Gore Fund, which is the affectionate term, which actually kind of makes me, I get kind of mad a little bit because I was one of the founding members of this, and I thought my name would add to the Blood and Gore. Bloody Gory Knight or Knight of Blood and Gore would be a good name as well. We started the firm based on a number of beliefs that I believe most in this auditorium would believe to be true, that capitalism was not functioning properly, that the market was way too short-term oriented, and that skewed business decisions in very unhealthy ways. And indeed, the challenges that were facing businesses and in fact facing the world were unprecedented in scope. Climate change, water scarcity, poverty, income inequality, developing the growth in developing nations, India, China, you name it, the list goes on and on. But the point is that we simply must find a more sustainable path for businesses and investors. I think in some respects I could end my talk in saying if we all did what Microsoft did, this would be a better place. But I won't, and I'll go through it a little bit in more depth. We focus at Generation First on sustainable capitalism. It's a part of what we do with our foundation. And it is really the broadest lens and the broadest challenge. And perhaps it's probably better for me to say, how do we define sustainable capitalism? Well, it's an economic system where business and trade seek to maximize long-term value creation, allocating for all ESG factors, environmental, social, governance metrics. And it's a system that internalizes externalities. And it aims to fulfill real needs, not made up or marketing needs, but real needs through economic and business decisions. The sustainable framework focuses on the long term, but has important implications for the short term in identifying risks and in identifying business opportunities. So sustainable capitalism really transcends borders, all aspects of the investment value chain, and all forms of ownership. In other words, it really impacts all of us here. And it is helping to coordinate across disciplines to inspire the necessary innovation that needs to create lasting change. Let me, in terms of the issue of sustainable capitalism, let me take one step back. Dana mentioned that I had managed President Clinton's campaign in 1996, and that's another talk in and of itself, perhaps over dinner. But during the campaign, just one story I wanted to relate was we had a dinner with a bunch of CEOs, about 10 of them. And during the Q&A, one of the CEOs said, Mr. President, you have a very hard job, but you know, we have a pretty tough job too. We have hundreds of thousands of employees. We're allocating an awful lot of capital. We have huge numbers of customers. We're global in our nature. So my question to you is, how does your job differ from ours? And the president characteristically had thought about that. And he said, okay, well, let me ask you one question. How many times do you make a bet the company decision or something that really impacts your employees, impacts your customers, is an important capital decision? It's going to impact your revenues. And the CEO said, well, you know, I guess that would be about 4 a year. And the president said, well, that's about what I thought. You know, the difference between your job and my job is that you do 4 of those a year, and I make 4 of those decisions every day. So that sort of puts in context the difference between the two jobs, and I've reflected on that a lot when I came to work and helped found Generation, that there's no question that the president has a really hard job and incredibly challenging, and he or she can do more to change the world than any person on the planet. There's no question about that. But when you think about it collectively, those CEOs have an enormous influence themselves. The S&P 500 making 2,000 huge decisions every year. You add to that the small cap, the mid cap companies, all the small businesses, all the entrepreneurs. And you have the ability to make a huge impact on markets, people, and the planet. And those decisions can be short-term in their orientation, or they can be long-term profitably focused. Those decisions can help to provide products and services that are furthering a low-carbon, healthy, safe, and fair society, or those decisions would not. They can either be thoughtful, sustainable decisions integrated into their financial models, or they won't be. So I think that policy matters a great deal. I've spent a lot of time in the policy world, but the business and investment decisions have even broader implications, and we need those businesses to make the right decisions that Microsoft is making, and we're going to hear an awful lot. M-COPA and all the things that the companies that Nancy talked about. You're going to hear a lot about this work this week on the broader scale of sustainable capitalism. I'm really excited to hear Joel Makower and Mark Mickleby, who I think are going to come up later on, talk about their grand strategy. It's an awesome story. But they're talking about it in the same sort of way of sustainability in the broadest sense. And it's all how we're going to go about integrating sustainability into our society. Now, generations niche is in the focus of the investment world. And we established an investment process at Generation that covers 3 strategies: public equity, private equity, growth equity strategy, and a credit strategy. And we established an investment process that uses a very detailed sustainability lens to identify the highest quality companies in the world. It's not a checkbox approach, but it is in a checklist, but it's a very deep analysis of both financial metrics and long-term sustainability factors to find quality companies as they seek a long-term competitive advantage. We seek companies that provide goods and services consistent with a low-carbon, healthy, fair, and safe society. And this process that we have put in play does not sacrifice value for value. It's an important, for all of you out there that are investing in this space, you don't have to give up anything by investing here. In fact, we would say that it's just the opposite. And the reason is that a robust analysis of broad sustainability factors actually gives you more information about a company's long-term prospects. It allows you to make better financial models. It gives you more conviction on the true value of that company. And at the end of the day, it gives you more tools and gives you the greatest opportunity to outperform. And so what we at Generation in our journey can say with confidence that the business case for sustainable capitalism and sustainable investing is robust and extremely compelling. The academic research, the company results, and our own investment track record confirm that integrating ESG into long-term business strategy leads to better economic results and better investment decisions. And I want to say that once more because it's really the fundamental point that we need to get across to people if they're going to be able to allocate capital to this space, and that's so important for us to do as we go forward over the next 20 or 30 years. And that is that we can say with confidence that long-term business strategy leads to better results and better investment returns. A sustainable framework enhances innovation, risk management, resource utilization, and can drive revenues, profitability, and competitive positioning. Now, Benjamin Graham of the investor and fame of Graham and Dodd once described how hard it is to beat the market, and many invest in index funds really for that reason, because it is incredibly hard to beat the market over a long period of time. He said that some managers can do it if they do 2 things. One, they have to focus on the value, not what the market price is, and they have to have a differentiated research process. And that really is what sustainability gives us and gives all of you as investors. It's about a focus on management quality and business quality using a very differentiated sustainability research lens. And the fact that you should want to know more about a company, both quantitative and qualitatively, seems that it is just a common sense notion. But as Voltaire, I pulled out a quote from him, said one time that common sense is not always all that common. And unfortunately, sustainable investing is not mainstream yet, and it's not that mature, and we have to grow that field. Certainly that's true in the US. I think it's less so for many of you from Europe, but we have enough long way to go. And so in the last year or so, a generation, we've come to the conclusion that as much as we have been able to do in helping to prove the business case by showing sustainability leads to outstanding results, it really isn't enough. We take 5% of our profits and put it into the foundation, and we think we've done a pretty good job, but we've concluded that we've been a little bit too cautious. Many of our clients at a recent client conference came, and of course they did say that they were very happy with their portfolios, which we were very pleased with, but they thought that as a leader in this field that we should do more. And at that same conference, Christiana Figueres was there, who were quite close to the UN climate negotiator. It'd be wonderful if she was the new head of the UN. She spoke at the conference and challenged all of us to do more. And to do everything we possibly could to set the world on a path to a lower carbon economy. So what are we going to do? So I just thought I'd take a few minutes to lay out what we at Generation are going to do. Some of the ideas may resonate, some of them may not. But it's at least part of what we've been thinking about over the last year or two. And there are 4 efforts on the firm level and 4 on the foundation level. On the firm level, we, after a while, and much to Lila Preston's chagrin, because she did most of the work on it, have finally become a B Corp. And it had a lot to do with the B Corp group coming to, B Lab coming to London, and we're London-based, and it was important for that. But that was an important step for us, and we think the process was actually pretty interesting, and we're very pleased to be a part of that group. We have 3 investment strategies, as I said, and we've got ideas on each of those. In the public equity space, we are probably going to continue steady as you go. That fund is basically capped off, but we need to maintain a very humble and paranoid approach because markets can change and whipsaw you at any time. So we're going to continue on doing what we've done, and one of the things that we focus on are these roadmaps to help us think through industries that we could be investing in and what does a high quality company look like within those. And we've done about 170 of those to date. We're going to continue to do that and to refresh them from time to time. So the public equity strategy is laid out in that sense. The second is the growth equity strategy, which is focused on resource innovation, resource productivity, and the transition to a low carbon economy, which is Lila is a partner on that fund, and she's going to talk about that tomorrow. Very similar to what Nancy is doing, and we do have some common investments. That has been really fun. But one of the things that we want to do is to greatly increase the size of that fund. It's a lot of money, but it's nothing compared to the needs that are out there. And we want to grow that because we do feel that this is the greatest economic opportunity in history. And over the next 30 to 40 years, the transition to a low carbon economy is going to dominate every single thing that we do because almost everything that we're doing now needs to change, and it will change. And there are going to be a lot of winners and there are going to be a lot of losers, and hopefully it's going to be smart investors that are going to be able to pick the difference between the two, but the opportunities are incredible. The last area, that we have is less mature than the others is our credit strategy, where we use our sustainable research lens, and we're going to hope to build that out in the future as an enduring franchise and work on that. Now, let me just talk a few things about what our foundation is going to do, because this hopefully will be relevant to some of you and some of the giving that you're already doing, some of you that are with foundations. We want to drive sustainability analysis to be mainstream. We've been doing that in the past. That's mostly what we've been doing. We want to continue to fund research to demonstrate the business and investment case for sustainability with further academic work with other consulting firms. We want to help investors and asset owners get access to the best practice tools that they can have, so they're going to be comfortable investing in this space. We also want to highlight and have the risk that climate change and carbon pose to one's portfolios. We were one of the early backers of Carbon Tracker and the idea of the carbon budget, and we want to continue on those kind of efforts. And also, we're going to spend a little bit of our largesse, which is not all that much. It's not nearly what the foundations that are out there in the audience, to help to put a price on carbon. 25% of the world does have a price on carbon. Obviously, the U.S. does not. Could be a long haul in that respect, but we're going to continue to help in those efforts. And we also are going to support new approaches to accounting and defining materiality with entities like SASB, which we have helped in the past and think is doing a great job. We also, and I hope others here, can also focus on the area of fiduciary duty, because if sustainability analysis enhances returns and reduces risk, it follows really that an asset owner's fiduciary duty is to consider these factors in their investment decision-making process. And that is clearly what we have felt, and we've written about this in the past. In the last year, another very large legal research report was written by Freshfields through the UN, UNPRI, and they came to the exact conclusion that it is the fiduciary duty to integrate ESG into investment management decisions. But that is not seemingly the view that is held by many fiduciaries around, certainly in this country, again, less so perhaps in Europe. So we want to continue efforts there. We're going to work with the UNPRI and the UNEP in helping to look to how we can increase education of asset owners and trustees and others to make certain that they have in their mind that it is their fiduciary duty to think longer term and to be integrating sustainability into their investment decisions. The other thing that we want to do is get a little bit more granular in understanding where there are gaps in the sustainable finance field. And we are now embarking on a roadmap. We said we've done 170 on other businesses. We're now going to look at one in the sustainable finance field. Our clients have told us that they do not feel that there are enough investable strategies for them, and especially those with highly skilled managers with good track records. Impact investing has come an awful long way, but it is starved for capital, and it is also starved for talent. And so what we want to do is have a project that identifies where the gaps in sustainable finance are. We hope that at one point, as we share this, it will be important as growth equity firms like ours can invest in those kind of companies at the GP level. But we also want to pinpoint it in the urgent needs of our philanthropic work and others' philanthropic work to see how we can help to spur innovation in that. And lastly, the point that we want to get to in our foundation is to build the capacity in the field of sustainable finance. Ralph Waldo Emerson used to start his dinner party conversation by asking his guests, tell us what has become clear to you since we last met. And it's a wonderful way to start a conversation, but what has become clear to us in the last 2 years is a renewed sense of urgency to allocate capital and investing in a low-carbon economy, if we are to have any chance of solving the climate crisis. We need to start now. We can't wait. Studies have ranged from 35 to $50 trillion that's going to be needed by 2050. It's an unbelievable amount. You're talking about the clean trillions. That's sort of on an annual basis. You add that up. It's an enormous sum of money. And we actually, frankly, don't have the talent to meet that need. The field of sustainable investing is relatively new, let's face it. It's somewhat immature, and we really, I think, we feel urgently need to build skill sets and capacity and need to start right now. And the good news is that the future leaders that are out there in business schools and mid-career finance professionals are eager for those kind of careers where their passion can also be their livelihood. The Morgan Stanley Sustainable Investing Challenge had 135 applicants from 75 business schools last year. The Echo and Green, which is a social entrepreneur fellowship, had 3,000 applicants for 100 positions. So you can see that there's enormous appetite for that, and there's an enormous need to go through the training. And so we're exploring now ways that we might help social entrepreneurs scale their dreams and help them to build their finance platforms and to help them with their finance networks. And although we are in a sort of niche area of the economy, we do have a relatively unique set of skills in the sustainable finance field, and we have a mandate, frankly, from our clients to do everything we possibly can to build this field. So we hope to develop and scale a program. We're looking for philanthropic and finance partners, and we know that asset owners need skilled finance professionals and entrepreneurs if they are going to meet the needs that the trustees have set for them for their performance targets. So they need these products out there, and we need those asset owners to commit huge amounts of money, including pension funds, sovereign wealth funds, foundations, others, high net worth, and we need that capital committed if we are to have a chance to finance this transition to a low-carbon economy. So I leave you with this, that the journey for us has been both rewarding and frustrating. We're rewarding in that we have built a successful franchise. We've got to keep at it. But it's been also frustrating that we have not yet been able to convince mainstream finance to think longer term, to internalize externalities, and to integrate sustainability analysis and vigorous sustainability analysis into their investment process. And Mark Twain once said, "The secret to getting ahead is getting started." So I hope we can have these kind of conversations today and get started on solving these problems. Thanks very much for listening.